What's up, investors? It's the Russian dude. Today, at the moment of recording this video, it is Wednesday. The December rate cut did happen, reducing the interest rate to an additional 0.25%. Even though this was a very questionable but expected decision, we were talking about this in the past in several videos, as the reason for this the inflation being on the rise again, and by reducing the interest rates you just motivate the inflation to continue climbing. Well, nevertheless, the Fed still decided to do the cut, maybe as a Christmas present for themselves and for the market. The fact is the fact, it did happen. What is even more concerning is that for the next year, 2025, Jerome Powell said that most likely the Feds are not considering more than 2 rate cuts of the next year. This was a pretty big shock for the market. The S&P 500 dropped more than 2%, once again, at least at the moment of recording this video, which for the entire market as a whole, 2% decline in just one half of the trading day. This is a significant decline, which shows that the stock market, the market participants in general, they are extremely concerned about the state of the economy and where it is heading. You don't need to be a genius to understand the very basic correlation between interest rates and inflation. Once again, they go down, inflation goes up. It is as simple as that. This is pretty much the entire purpose of the Feds, to maintain this fragile balance. A lot of people were questioning whether another 0.25% rate cut is needed in the end of the year in December, which once again just happened recently. But still, people thought that, well, the Feds, they promised they're gonna do it. If they suddenly decide not to do it, there'll be even more questions. Why, what's happening with the economy? What happens with the inflation? Is it reaccelerating once again? For this reason, maybe this was exactly the reason why Jerome Powell decided to do a rate cut of 0.25%. But at the same time, he warned the stock market participants that do not expect that the economy will be recovering as we originally planned. Maybe some things will get out of control, but this is the problem for the next year. Right now, just enjoy your winter holidays. This was quite literally the message that the Feds gave to the people. Just the statement itself that there will be only 2 most likely rate cuts next year once again already dropped the market significantly. Now imagine what if Jerome Powell today said that, well guys, we need to stop rate cuts. Well, today, because the economy is struggling. And just as a reminder, the expectation that the rate cut will happen today was approximately 95 to 96%. Which basically means that yes, it will come as a huge surprise if it did not happen. That is exactly why it is my personal assumption Jerome Powell had to do it. He was almost forced to do the rate cut, even though maybe he understood that this was not the best idea in the current conditions of the market. Once again, the inflation is on the rise. Most recent CPI, PMI reports, they showed it. Both regular and core CPIs, everything showed that the inflation is starting to go up once again. So once again, reducing the interest rates even further, this will stimulate the inflation to continue going up. They decided to proceed with this option nevertheless. That is why it will be very curious to see how the inflation will respond until the very next Fed meeting, until the next inflation report, which we're gonna see in several months. Well, that's pretty much it. Very questionable decision by the Feds if you ask me, but please guys let me know down below in the comments what do you think. Was it a good decision to continue cutting the rates in the environment of increasing inflation, or was it a bad decision? Personally, I think this was a pretty bad decision. I'm curious to hear what you think. And as always, thank you so much for watching. If you enjoyed today's episode, please subscribe to my channel and see you tomorrow.